And that music means that we are live here on YouTube, our tackle trading halftime report. We've got Coach Cody, Coach Grant, Coach Matt, and myself, Coach Tim. Tackle trading, bringing our daily routine show here on YouTube. Matt, first of all, how are you doing today?
Tim, doing really, really good. Excited to be here.
Grant, welcome, my friend. Our tackle trading community knows you well. You're a coach. You do the stock report quite often. You've actually been doing a lot of the coaches shows recently as well. How you doing, sir?
I'm doing well. Thanks for inviting me. This is my first halftime report.
Hey, man, we're just going to work through the markets one step at a time. It's where we do our daily routine. It's a kind of a way to teach our community out there how to go through the markets methodically. I'm going to have you drive today here, Grant. Go ahead and bring your screen up when you can, and let's get started. Kind of a mixed market here today. I do want to start just with, condolences and thoughts and really even prayers out there, Matt, to the Notre Dame fire over there. I know that the Catholic Church, that's been around for about 1,000 years. What was your reaction to that thing happening yesterday?
Like everybody else, just glued to the television, trying to figure out what was going on. And I mean, as you're talking about a symbol more than anything else. It's a symbol of positivity. It's a symbol of religious faith, obviously, of hope. And it's just, obviously, it was very, very, very sad. And it's like a lot of times when you see, human or economic tragedy, a lot of people come together. And I think that's what you started seeing yesterday, tragedy bringing people together again.
Grant, I do think we saw that, and you guys were talking about it in the pre-production show, some people have already ponied up a bunch of money to rebuild the thing. They'll rebuild that building, don't you believe?
Yeah, absolutely. And in fact, wasn't it several billionaires already stepped in, offered some money?
I've seen people like pledging $150 million or $1 million or $5 million. I mean, it's not going to be a monetary thing. They're not going to, the money's not going to be an issue. It's just a matter of, what do they do to restore as much as the original setting as humanly possible?
Yeah. Well, hopefully,
some of that structure dates back over 1,000 years, guys. The original wood and everything.
Wow. Yeah, it's pretty crazy. Yeah, when I was in the building, and it was a couple of years ago, I took my wife. It was on our anniversary, and we had a chance to go to the Notre Dame, and we walked in that building. And I've never been in a cathedral or a building quite like it. Just knowing that you've got 1,000 years of history around you, it did have presence to it. So I can see how people are moved and touched. Obviously, what a tragic and kind of crazy story. Hopefully, just an accident, Matt. We don't know that yet. But hopefully that is the way it shakes out.
Let all investigations play out. Shouldn't speculate.
All right, let's start with the market here today. Netflix earnings tonight, I think, is going to dominate the headlines. You've got a chart up here on Netflix. Grant, when we are looking at companies that are major drivers in terms of sentiment, opinion, and all that kind of stuff, S&P 500 is kind of mixed and flat today. We'll go through the analysis there. Just while you've got this chart up, what is your anticipation on Netflix?
Well, certainly at this point, it's been a positive move. I foresee, though, if you come right across here, we're going to run into some resistance zones for sure. So I expect that the momentum will slow down unless, of course, we, depending on how things go with all the reporting, unless it really pops and can push past it.
Yeah. Matt, the big Disney Netflix fight has been happening quite often the last few days as Disney released that streaming service, and now Netflix is coming into earnings. I have upside expectations personally, but man, earnings are such a crapshoot. If you go back on the history of Netflix, you've been a trader 14 years, you know this. This stock can gap 10% up, 10% down. It can gap out and then fill back. What is your anticipation here for Netflix earnings?
Craziness, volatility, uncertainty, expect the unexpected. Wherever the original gap goes in the aftermarket, watch the cash open, because that's going to be the most important aspect of the Netflix earnings report. I've just seen Netflix too many times in my life gap one way or the other and immediately fill back in. So there is a lot of uncertainty around Netflix's earnings, and it has the ability, especially in this tight range right here, where you're seeing some neutrality between 345 and 370, 380. You do have the potential to break out of that range one way or the other. And I'm not in the prediction business when it comes to earnings gaps. But in fact, yesterday we were doing a little bit of that in the podcast, and I was just like, I hate this game. This is the most uncertain game. I mean, literally nobody knows. It could report amazing earnings and go down. It can report, horrible earnings and go up. And, you look at some of the earnings and you're like, I just don't understand this movement based on what I read in the numbers. So it's not a game that you should play very often. And I was listening to the podcast last night, Tim, and Slawomir talking about his first trade on Ford, and he probably put a lot too much money into a Ford trade right before earnings and got a little lucky there. But you don't know those things when you're a young trader. You know those things when you're a veteran trader. And so
That's right.
I just don't like the prediction business of earnings. But one thing I do understand is Netflix, and Netflix has a bipolar disorder when it comes to earnings.
Yeah, go to the trade tab here for a minute. One thing that we can predict, Matt, is somewhat volatility. We know what the projected gap is going to be one way or the other, whether it's up or down. I'm with you 100%. I think it's kind of an exercise in futility, quite frankly, try to project up and down on these gaps. But we do know the MMM projection based on the implied volatility move. And it looks like 24 points over there on the right, 22 on the MMM. Do you see those volatility numbers up and down the right side of the option chain, Grant?
You bet.
Yep. So the volatility percentage for this week is 95%. There's only 2 days after today. Good Friday markets are closed. And the plus or minus is until the end of Thursday. Now, the MMM, which is more popular up here in the middle, 22.83, that is for the gap tomorrow morning. And so we're looking on a $350 stock. What is that? Let me do some quick math. About 6% they're projecting.
Close. Mm-hmm.
Well, Matt, I'll throw this one at you. Higher or lower than 6% gap?
That's low for Netflix.
I think it's low too. I think with all the anticipation, all the debate, how it's been stuck in the mud and how the whole market's been moving, I think 6% might be underpricing volatility. I've seen this stock do a lot more. I would not be surprised at a $30, $40 move one way or the other, up or down. And that'd be 8, 9, 10%. So interesting. Grant, do you play any earnings stuff?
Earlier on I did. Today, though, I don't trade the earnings. So, I kept trying to get the right straddles, the right strangles figured out to make it work. Sometimes it would work, and then I just kind of like what Matt said, I finally realized I'm not able to get that wrapped around well enough. So I don't play the earnings.
I see. All right. Well, prudent traders got to find their edge in their system. It's a Vega type strategy. Matt, any last thoughts on Netflix here?
It leads me to a conclusion of an inverted butterfly. And, I've done inverted butterflies with some success on Netflix. I've done some inverted butterflies with no success on Netflix. And one thing I've realized is that it probably will move more than the 22 points that is expected, the 6% gap range. But you got to be there bright and early in the morning to manage that trade, because it just has so much volatility the next day. You look at what happened two times ago, gaps up, comes down. You look at 3 times ago, gaps down, comes up. And that's Netflix has been doing that since 2015. So, it's just something. I think the numbers do lead you to an edge on an inverted butterfly, with the expectation that we're going to move more than the gap range, maybe a debicon in that capacity if you have a little bit more advanced knowledge. But I would hesitate to play something range bound.
Yeah, it's going to be an interesting one. I'm going to be glued to the screen. I can tell you that, whether I have a trade on or not. I just took a day trade off Netflix. I'm not going to carry directional stuff into earnings. There's no question about that.
We won't carry directional stuff into the halftime report.
That's right.
Are you kidding me?
Oh,
literally, Tim has his day trade on Netflix just a little bit ago, and he's like, "Hey Matt, help me make this decision real quick." He got hit, come close to my target. And I said, Tim, we don't carry day trade through the halftime report. We don't manage them.
Well, little hesitation pause there on that pullback, Grant, mid-morning. And I just went long. I've been feeling like Netflix was going to price upward today, and it was showing strength.
You've been complaining about them getting hit by Disney for the last 4 days.
Not complaining. It just doesn't make any sense to me. I'm going to pay for Disney.
Is that a complaint? A little bit. I complain all the time like that.
Maybe you got me there. I'm good with that. Anyway, Grant, I know that you do a lot of day trading. We're going to be talking about that a little bit later in the show, but let's go to the S&P 500 and start working through the markets one step at a time. ES contract, as I look up and down the board, we've got some mixed action here, guys. The heat map shows me tons of weakness in healthcare. There we are. I mean, we talked about it, even on the newsletter this week, Cody, we had healthcare is the only sector on the bear side of it. United Health came out and got destroyed here on earnings, Matt. We'll go through that chart here in just a minute, but let's first start with just the S&P itself. Mixed action, and there's lots of action out there, guys. I'm seeing volatility. I'm seeing movement. I'm seeing in certain industries, but just not in the whole market. The whole market's pretty flat and dojiing here for about 2 weeks in a row. Matt, what's your reaction first on the SPY here?
As long as you stay above 2,900, you're bullish. That's my read. It's been doing this. It's been setting support levels at your significant whole numbers. As long as you stayed above 2,800, we had that bullish as well. And we're up 113 points since that moment in time 2 weeks ago. So my read's going to be the same. As long as you broke out last Friday, as long as you stay above the breakout channel at 2,900, you're good to go. You're overextended in this short-term perspective. So I wouldn't be looking to be very, very aggressive when you really only got about 30 points to the top side before you start getting into those all-time highs, and that should consolidate it a little bit. So I wouldn't be overtly aggressive here, but I also wouldn't be too cautious and just trade your plan, and as long as you stay above 2,900, you're some degree of bullish.
Yeah, Grant, what's your take here as well? I'm with Matt. I think technically nobody can really argue, but when you start getting into markets where you see doji, does that give you moments to pause? You have an extra caution? How do you approach that?
Well, it does. And in particular, I'm actually watching today because if you look at the last 2 weeks, it's the market's done a sell-off in the morning, but then the bulls have come in in the afternoon and bought it back and pushed it up. So I'm actually watching to see if that happens because there's a sell-off this morning. I'm waiting to see if it's going to actually continue and turn around and be bullish. If it doesn't, then that starts to give me some indication that there might be some loss of momentum. So yeah, I'm watching this closely.
Larry Fink was on CNBC here this morning, Matt, talking about how stocks have all kinds of room up. I wonder why he's saying that.
I say what you will about Larry Fink, but he'll speak his mind.
He will.
And he's not going to hold back. I mean, he does not care, Larry Fink. He's the guy who said 3 years ago that the only reason BlackRock's in business because the American consumer won't wake up enough to realize that they're paying all these fees and won't take control of their own financial future. Now, obviously, I'm paraphrasing to a certain extent. I don't know the exact quote, but it was basically that we're in business because the American consumer is ignorant, basically. Mm-hmm. Yeah. And he wasn't lying. No. He's not lying. That's the truth. Yeah. He sells mutual funds. He's one of the biggest mutual fund providers in the world is BlackRock. And he came out today and he started talking about how he didn't talk about a risk to the downside, Tim. He actually talked about a risk to the upside. The risk of the melt up is what he was talking about. And he was talking about how there's so much money on the sidelines, which I'm not necessarily I believe in that argument, but I can understand it. There's so much money on the sidelines. But what he said was, and think about this, guys, at the end of 10 years in the marketplace, after the end of 10 years, he called the central bank the most dovish in the history of the U.S., basically. He said, with the most dovish situation that we've ever seen, you have a risk to a melt up here. And that's when he's talking about inflation in the market getting way too overvalued in the short term. And I do agree with that to a large extent. It's one of my biggest gripes with the central bank that they're creating this monetary environment that's just going to melt the market and put us into some inflationary pressure that I don't think we're willing to go to, especially for future generations. So that's what he was talking about. And again, he's not wrong. Larry Fink.
Let's get a quick peek on his chart.
Two of the best out there.
Oh, Larry Fink, I have nothing but respect for, but he does have some one-liners, Matt, that do grab your attention. There's no doubt.
He does not care.
Yeah.
He does not care, and I like direct people, so I'm okay with that.
BLK here, Grant. Give me a quick peek at it. They actually had earnings, and that's why he's on CNBC here talking about it. BlackRock is actually breaking out, showing strength. Earnings reaction here, Matt. What's interesting when I dig into companies like BlackRock, and I've not read the full report here yet. I just saw a lot of the headlines coming through. Huge excitement over fixed income. Their assets are above $6 trillion of assets under management.
Help me out with something here. Okay. Yep. BlackRock versus Bank of America. And This is why its earnings are uncertain. When you're looking at BlackRock here, up 2.48% on the day, 11 points on the day, triggering at 463 on the day. BlackRock's earnings were 6.61 on earnings per share versus the expectation of 6.20. Revenues came in at 3.3 billion versus the expectation of 3.3 billion. Revenue fell year over year at 6.6%, and BlackRock's up 2.45%, 2.48%. Look at Bank of America real quick.
Yeah.
Let's pull up that Bank of America chart. Now, Bank of America, not the exact same industry that BlackRock, but the same type of stadium, I would say. Bank of America came in at 0.70 versus a 0.65, so a fairly similar beat on earnings per share that BlackRock had. Revenue came in at 28.8 billion versus the expectation of 23.3 billion. So they beat on earnings per share. They beat on actual revenue as well, and they did really good on revenue, and revenue up 6.2% year over year. So I mean, you're talking about a fairly similar report. Bank of America down a little bit on the day, BlackRock up a little bit on the day, but revenue year over year, Bank of America actually increased versus BlackRock's, and Bank of America gapped down, BlackRock went up. That's the uncertainty of earnings.
It is. Yeah, I would agree with that. I wonder if it's mostly his conference call and his commentary. You know, the stock intraday actually on BlackRock started taking off after the bell and after the open, but there can be some, it could be.
But it could have been it could have been very simple, him saying, melt up.
Yep. Yep. And the people who trust him and follow him probably took that cue. Market open actually started a run here, Grant, on BLK. What are you reading here intraday, Grant? Walk us through this.
Oh, gosh, yeah. So certainly, as you just mentioned on the open, look at that, just pow, shot up, and then it's consolidation. It's forming into a flag at this point. You still got upward pressure, though, so it's still got enough momentum to kick it up some more. You're going to run into some tension here, though, around 470, so you got to keep your eye on that. But it could still melt up. It's got room to go.
Yeah, one company that grabbed my eye in terms of their actual report was JB Hunt, another S&P 500 company on earnings here today, JBHT, if you would here, Grant. And we're going to get earnings hot and heavy now as we move through the month of April, guys. And it does lead us to market conclusions. You know, the propensity of whether companies come out and beat or miss or whatnot is going to drive market action. JB Hunt, one of the biggest trucking companies out there, Grant, they cited growth concerns. And they missed. They absolutely missed. They dropped down here on the daily chart. You're going to see a gap into 100, which some would say is a logical point that it might hold, but it did not do that on the pivots before. When you see a post gap, are you now more willing to take on watch list opportunities, trading opportunities? Now the earnings is gone, Grant?
I am. And in particular, personally, my style is when it does this sort of gap, I'm a fan more of looking for it to touch a reference line before I get into it. But that's just my style, because there's times where I've been speculative on the gap and been wrong. And so for me, I'll be more conservative and I'll wait for it to hit a reference line. That reference line could be either some support or resistance level, or it could be a moving average line. Once I get that confirmation, then I love to go with the gap direction.
Yeah, the hospitals are all taking it on the chin here today. HCA is the biggest loser on the S&P 500. A lot of this is being driven by UNH volatility. We'll talk about that when we go through the Dow. Just absolutely brutalized. Healthcare plan companies, hospitals, they're all just beaten up. Cigna is down as well. Cigna's down 5.5%. We had this one on the report. Grant, was this stock report or option report? I think this one was option report, but we see tons of action throughout the hospitals. Now, Grant, I want you to back up to weekly on this one and kind of do a little multiple time frame as to why the significance of some of these breakdowns is grabbing our attention as coaches, and walk us through the technicals here. While Grant gets that weekly set up, Matt, what's your reaction to seeing healthcare plan companies and hospitals just absolutely getting destroyed?
It's the same reaction I've had for the last month and a half.
Yeah.
I mean, there's been a no-buy opportunity here since they were on the hill. If anyone was looking to pick up healthcare since they've been on the hill, you've been making a mistake.
Yeah, it's been bearish. Grant, that weekly chart is breaking below moving averages. The daily broke below a pivot point and a trigger. It's got tons of volatility here. When a company's down 5.5%, let's say that you didn't have a trade on it. Do you feel like you got to wait till the next day? I mean, how do you approach that type of situation in a huge red candle like that?
So there's two ways that I would play this. So the first is, you can see where my mouse is. I'm going to drop another line right there. One is more conservative. I'd wait for it to come back and touch that, right? So come back to a little area of resistance right there. That's a more conservative way to play that. Or The other way is then you say, all right, I feel confident about the momentum, and then you just look for some sort of confirmation below the close of the day, wherever that ends up being, and you follow the momentum down. So those are two ways that I've traded it.
Yeah. Let's move on to the Dow Jones if we can here. And the DIA. Now, Grant, we usually look at the futures symbols in here, and you're more than welcome to stay with the ETF. Do you like reading the ETF over the futures or vice versa when you're personally trading, or do you do it one way when you're teaching? What's your take on that?
I use the ETFs for my equity position decisions. I use that because then I try to avoid some of the overnight action and not thinking about that. Largely because I'm thinking about the traders that are involved. So when trading the equities, it's a different group of people. They're getting informed slightly differently. So again, I'll use the ETFs for equity decisions.
The Dow's kind of fading up here, guys. I mean, not really a lot going on the broad index. You have some companies that are grabbing our attention, obviously United Health, but let's stay with DIA here for a minute. Grant, what's your read chart-wise on DIA?
Well, as you just hinted to it a minute ago, I see slowing momentum. Certainly still bullish, but at this point, it's been above its moving averages for so long. And one of the ways I trade is I use momentum moving averages as well. So I use the 5 and the 9, like what Mark does, right? So I'm a fan of understanding when do I see momentum start to turn. That just gives me a visual cue on it. So bottom line, I see it slowing down.
Yeah. Matt, there's mixed action in the Dow. Johnson & Johnson is up. Nike's up. Intel's actually running like crazy. Matt, what's your overall read on large caps versus some of the other indexes? Do you have the Dow and the S&P kind of neck and neck right now?
Yeah, all of them fairly close, right, with lagging with the Russell 2000. But again, I mean, you're not going to have a significant difference of opinion in the NASDAQ versus the S&P versus the Dow right now. They're all fairly similar. The NASDAQ being a little bit more overextended than the other two indexes, with the other two indexes just breaking out really kind of late last week. So I got the S&P slightly above the Dow, and I got the NASDAQ slightly above the S&P, with the Russell at the fourth.
You know, a couple of companies that are grabbing my attention as the market stays flat. There's all kinds of opportunities in the individual sectors, industries, and companies. Johnson & Johnson here, Grant, gapped up, one of the better performers on the Dow here today. Earnings beat, you know, they've had volatility the last few months. There's no doubt about it. Gapped into resistance, though. Just from a technical perspective, what's your read here?
So, of course, this was on one of our reports. Clearly, it triggered. So I still think it's got room to go, though. Obviously, want to see it break above this key resistance. This, of course, is one of our first targets, or it was our first target. But in any event, yeah, I think it's still got some momentum to carry forward.
Yeah. Another one that's actually showing me tons of strength is Intel. You know, Intel, and Matt, we've had these kind of stocks, Cisco, Intel, these types, as some of the leadership in the market. The tech sector, we've got ranked as high as any other sector in the entire market. When Intel's run this far, this fast, you kind of trail stop and want to catch that trend. What's your read on that approaching the all-time high, Matt?
I think it's a very positive thing. You got a lot of momentum going into that all-time high, and if you are triggered into Intel of that breakout above 55, as we had on the report last week or a week and a half ago, then you're still happy. You're showing momentum going into that. And like I've always said, you know, when you're coming into a target, you really want to let the momentum and you want to let the data do the talking instead of you looking at profit loss columns. And, you know, that was my argument on Apple when it hit into that 170, 180 area as well. I mean, trust the momentum. You got a big green candle, you got momentum going into that target. Obviously, the all-time high is going to be that magnet of a price threshold. So trail stop loss, keep it underneath the low of the day.
Yeah, another stock that's grabbing our attention is Nike. And this is the post-Tiger Woods play. Every time he wins the Masters or a tournament, Nike stock goes up. It's been up now, you know, 2 days in a row. In fact, I think it's up a couple of points just on that beat. And obviously, Tiger winning that Masters is going to bring attention. He still has a contract with Nike and whatnot. Grant, you love golf? You watch golf?
Well, you know, let's say I play golf. The ball doesn't really go where I want it to, so I still have sort of a love-hate relationship with it, but I do like golf. Yeah.
We'll have to have a tackle trading golf outing at some point here.
That's right.
And hit the ball in the water a little bit. Matt,
there you go. That's where I can hit it. Yeah.
I'm for that completely.
Who would
Yes.
win out of the tackle coaches? Golf.
Scratch, not handicap.
It's not me, man. I wouldn't win.
Tyler Craig.
I think it might be Tyler. Tyler's actually a pretty good golfer. Matt's a good golfer too. Matt and Tyler.
I am not a good golfer. I'm a 14 handicap.
Yeah, you could score.
That's on a good day.
Yeah.
You might be hedging a little.
I might be using my foot wedge.
Nike breaking out would be interesting here, guys. I got to tell you, I know it's momentum off of the Masters tournament, whatnot, but just technically, I mean, it breaks the high point. That is a runner. Matt, V-shaped recoveries into resistance are not the same kind of breakout as a consolidation before resistance. Would this be a trigger you'd be interested in, or would you kind of pass?
No, I'd pass. I don't like runners into breakouts, and a lot of times I'll see a breakout and then give me a nice little consolidation back into the breakout channel, and it doesn't have to like go up 5 points and come back down 5 points to test the breakout channel. I mean, it could literally go above for 1 to 2 days, play a little defense above the breakout channel at, say, what is that, 88.60? We'll call the breakout channel. Mm-hmm. So you break out of 88.60, let it fade, come back down. I'd rather play that secondary movement off a extended run that Nike has had post earnings gap. So you're looking at Nike coming in from 81 all the way into 88 on a breakout. That's a fairly significant move for Nike going into the breakout. I mean, are you really going to say it's going to move another 5% without having some degree of consolidation?
Yeah,
that's just not my thing.
Tough one for me on a swing trade. And by the way, Coach Emily does bring up a very good point. Coach Rosemary might actually win that golf tournament. Rose is a very, very good golfer.
I think there's not one thing in this world that I would bet against Rose on.
Yeah, that's exactly right.
Not one thing.
Couple of companies grabbing my eye on the downside here. Disney actually finally a red candle after this huge run up and gap. Counter trend trading is a tricky beast, and it's not necessarily something I like seeing traders even attempt to do because I usually see them fail more often than they succeed at it. Grant, if you
short Disney right here, or if anybody makes an argument to short Disney right here to play the contrarian after this is the most momentum based stock right now.
What is the short interest?
What argument were you even setting up there?
None. I mean, would you anticipate a pullback? First of all, there's 2.4% short float, Matt. I'd like to meet those 2.4%.
I know who that 2.4
is. Oh, interesting. Grant, are you an Avengers fan, Marvel fan, Fox?
Absolutely. Yeah, absolutely.
When you heard that story about Disney streaming, I mean, you're going to buy when it comes out?
Yeah.
Yeah, me too. I got kids, but I'm going to love the content as well. Obviously,
I have grandkids, and so of course I have to watch with them, right? So
this is not typical for Disney. I mean, obviously, it is not typical behavior of Disney. Do you think investors might start treating Disney with a little bit more volatility and anticipation of future growth? I mean, this is an old dividend kind of conservative company, Matt. Now that they're getting into the media business in a much more direct way and competing with Netflix, do we think volatility can continue here?
No, it'll slow down to get back into Disney's personality. I mean, Disney is a value stock that's not overnight going to turn into a growth company because of what's going on with streaming services. Yeah. So I fully expect the volatility to subside here. Let everybody kind of cool their jets a little bit, and let Disney come back down to a trend. There's no trade here. There's no buy here. There's no sell here. There's investors are still celebrating. I mean, as somebody who loves Disney, I mean, it was the company I picked to stick with, right, for the next 10 years, one of those. Mm-hmm. So, and I think Cody picked Disney as well. So you're not looking to lock in gains on Disney if you're a value investor.
On you guys.
Say again, Cody.
Disney is going to take over the world. I'm telling you, they're going to start with Warner Brothers, and then they're going to do the Pinky and Brain thing.
Yeah, Disney.
I will tell you, the Fox acquisition helps their streaming service so much.
Yeah,
Disney content is great content. There's no doubt, but they don't have they do have some type of limited reach. With Fox, they eliminate that limited reach. They have so much data, so much catalog that they can immediately start competing with the Netflixes and the Amazon Primes of the world.
Dude, I'm fired up. I would start watching The Simpsons again. I'd go back to my old childhood show and just start streaming the old Simpsons shows. I'm sure that I can't wait. I think it'll be cool, but I don't expect it to turn into a growth stock. It's a $230 billion value stock, man, with a low
Value stock.
PE ratio. Pays a nice dividend. I think it will settle in. I'll tell you who's not settling in right now is United Health. We buried the lead a little bit here today. This is probably I got to tell you guys, I mean, this is a really interesting stock. Now, many times when I see volatility like this, I don't expect it out of UNH. Again, a dividend paying conservative company that gapped open.
And honestly, that's Netflix personality right there.
Matt,
that's not a United Health personality. That's Netflix personality.
Go to the intraday, Grant.
It's insane.
Go to the intraday. It all happened when the CEO started talking.
I know.
Okay. You know, the actual number gapped the stock out, earnings expectation. But when the conference call started, the stock just started fading. And I'll give you a headline. I didn't listen to the conference call. You got everything you need on the chart. The chart will tell you what the market thinks. CEO of United Health says Medicare for all would destabilize the nation's health system. He comes out with very strong warnings about the future where we're moving healthcare, how it's going to affect their bottom line. He did not paint a very, very optimistic picture based on what he's seeing from politics and on the Hill and all that kind of stuff. Obviously, investors and traders alike, they are selling this thing aggressively, and it's what's driving a lot of the healthcare moves here today, Cigna and all the other ones that we looked at. Matt, first of all, reaction to this earnings report and UNH in general.
Well, I'm not going to get into what the CEO said about the healthcare plans and whatnot, because I don't think anybody has a great plan moving forward for healthcare in the United States, to be perfectly honest with you. And he has his opinion, and he gets paid $1 per subscriber to his services. So enjoy that 50 million bonus on making Americans forced to pay for healthcare. I just don't think he's worth $50 million, to be perfectly honest with you. But looking at the numbers here in United Health, Tim, 3.73 on the earnings per share versus an expectation of 3.60. Revenue came in at 60.3 billion versus a 59.7 billion expectation. A slight beat on both earnings per share and revenue. And they also slightly increased their guidance, Tim. And that's what really kind of led to the pop up in the first place, is you had a slight beat on earnings per share, a slight beat on revenue, and a slight beat on guidance. And the stock had been really hit hard over the course of the last 3-4 months. And so you're talking about a stock that's undervalued versus its relative performance. You're talking about a stock that beat on earnings, beat on revenue, and beat on guidance. And yet when the CEO starts talking, he just punished all of the investors.
He sure did. Yeah.
He didn't earn that $50 million bonus check today, I'll tell you that.
Not today, he did not. Obviously, this is not a good technical read here, Grant. It's a difficult one, I think, when you see a stock gap one way and then completely backfill the other way. At what point in the morning would you have confirmed that trend had switched over there, Grant, as you're reading the intraday chart?
So for me, I'd be looking for it below the 20. So while I see it come back to here, that's where I begin to take note and say, all right, so this is serious. Once it's closed below that, certainly the confirmation below the 50 right there is the second level of confirmation you'd be after.
Healthcare companies, they're not out of the woods here. We've obviously got a bear sector rating on them in the short term and really just volatility. And United Health is driving it here today. Let's go back to the daily chart.
Very, very quickly on this one, though, Tim, on United Health. It's not just United Health that's being impacted here. It's every healthcare plan. It's your hospitals, HCA, UHS, both down 8%, 4.6%, respectively. In the healthcare plans, UNH down 5%, CVS down 1%, Anthem down 6%, Cigna down 6%, Humana down 6%, CNC down 6%. I mean, it is just across the board. Once that CEO started talking, everything just started going down.
Just took it right on the chin. There's no doubt about it. And the brightest red on the heat map is all in healthcare today. It's just standing out.
Isn't that amazing?
Yeah.
Healthcare.
Well, not biotech either. Usually in healthcare, the big volatility is going to be in biotech and stuff like that.
Biotech all of a sudden are safer than healthcare plans.
Hospitals are taking it on the chin in this market. Unbelievable. That's why the market. Well, and we also have some volatility in gaming stocks. We'll get to that here shortly. Go to the NASDAQ if you would, Grant. Let's keep working through the market one step at a time. And the NQ contract.
You go to Qs or NQ?
Qs. Let's do ETFs. We've been looking at ETFs here today.
Okay.
NASDAQ has been just strong.
Yeah.
And we're about to break into an all-time high. I've got this one kind of rated at the top here. Grant, give me a read on the chart.
Oh gosh, just as you said, it's maybe it's a melt up, but boy, tech stocks in general have just really been shooting up. So continuation, even a gap up here this morning. Like expand this out here. I mean, wow, just what can you say? Bullish. Heads up though, we're coming in, like I said, the all-time high. So.
We sure are. There's some interesting action even at the top of the NASDAQ here. I'm looking at Amazon trying to break out AMZN. It's been stuck in the mud for a long time. Obviously, we're still approaching earnings here later in the month, but Amazon is breaking above a resistance point here today, guys. And it's a tight consolidation, kind of a flag type or even an ascending wedge type pattern. Grant, are these technical triggers for you that are worth taking?
Well, I always take a look at the consolidation. I'm a consolidation fan. So right here where it triggered right there, that's a very interesting read for me, right? So like, okay, it just came above this. So I go to the left and I start thinking, what's in its way, right? So I got a little bit of shelfware here I got to watch out for. Otherwise, I got some clear sailing up. Yeah, there's a couple opportunities. It'd be sort of a short-term play, but yeah, I've got a little bit of headwinds right there. I'd probably wait for above 1875, but otherwise, yeah, it's got some room to go up to 1915.
Amazon tends to be a sprinter, Matt. It's been consolidation, then sprint, consolidation, then sprint. Is that a trigger for you?
It would be if earnings wasn't coming up, and I don't trade in Amazon directionally. I'll trade it through credit spreads and whatnot. So it would be a bull put trigger for me, but earnings is coming up, so I'm going to wait.
Yeah, Google approaching resistance.
To me, that's a breakout of a high base consolidation. That's a trigger.
Yeah.
Like Grant said, you just got so much resistance ahead of it. It's better to play it as a theta than a delta.
Well, and it's not like we're really running here today across all different tech stocks. Amazon up 1%, Cisco up 1%. The leader out of the mega companies is that Intel that we talked about. Obviously, an interesting one. United Air, I believe, has earnings tonight. Just kind of keep an eye on that. The airlines could be impacted with the recent volatility. UAL, if you would here, Grant, we do have earnings on UAL coming up tonight. Airline stocks, they're volatile. I mean, they're traditionally volatile, and I do believe that we will get some volatility through the earnings season. Again, obviously, Netflix, if you're trading it, keep an eye on it. Tech stocks in general, Matt, they've been better performers. A lot of them have been companies like the Twillos and those types that are running. Do you expect tech to continue to lead the pack here as we're heading in through earnings?
I wouldn't have it rated number one if I didn't.
That's right. Move on to the RTY if you would here, Grant and you can do the IWM if you want, or the RTY, either one. We're ETF day today here, Grant.
IWM it is.
You bet. Oh, hanging around. There's not much difference in small caps. Obviously over the last couple of months, you got a W pattern developing. Obvious trigger above that would be significant. When you see that moving averages kind of come together here, Grant, what's your take on that?
Yeah, well, for me, it's if it continues to consolidate right there, I'd be hoping and looking for a break above that consolidation. So you can see I've been watching this one. I want it to go above 159 right there. So for me, I'd love it to sort of just mess around that and then pop. Once it goes below 159, to me, that's a good signal up.
Yeah, Matt, anything that you're looking for in small caps opposed to other indexes?
No, they bore me.
They kind of do bore us lately. There's no question about it. Let's move on to the $ DXY or the UUP. We can either do the ETF or the index, either one. Obviously, the dollar is going to be the currency that you start with first. It's up today, kind of showing us a nice little green candle. Matt, let's get your analysis on the U.S. currency markets here.
The U.S. currency is a little flat right here. Let's look at the dollar very quickly. You do have support right now at about 96.78 on the dollar. You do have rising moving averages with a bullish retracement coming back down into that. So you do have cause and reason for the dollar to go back up into that resistance level at 97.5. Not only did Larry Fink talk today about the U.S. being the most dovish it ever has been, which it hasn't. I mean, we aren't at zero interest rate and we're not printing $85 billion a month right now. So there have been areas and time frames over the last 10 years where we were a little bit, if not a lot more dovish from a monetary perspective. But right after Larry Fink said that, Australia came out with their meeting minutes from their recent meeting, and they look like they're going to start cutting rates in the future. And so, you do have some of the other currencies out there that are even going a little bit more dovish. I kind of like the euro here right now, to be perfectly honest. 113 has been a very important number for the euro in its past, and you kind of are slowing down yesterday with the trigger here today on the euro dollar cross pair. I'm also keeping an eye on the British pound US dollar cross pair as well, keeping an eye on perhaps a breakdown out of that 130 level on the British pound US dollar cross pair. And then the one I'm looking at as well is the dollar Japanese yen pair, Tim. You're punching up against a really, really, really important resistance zone right about 112.10. And I do think a close above 112.10 is tradable from a swing trade perspective with the dollar Japanese yen cross pair as well.
Yeah. A lot of actual interesting patterns developing there. That Aussie news is also interesting. As we head through the week, there's only really one major economic report for the U.S. that I'm paying attention to, and that'll be Thursday's retail sales number. There's a bunch of Fed testimony through the week, but just another reminder, if you didn't watch Halftime Report yesterday, on Friday, we do have Good Friday, and markets are closed, but Forex markets are not closed because foreign exchange is a global market and whatnot. It's going to work that way.
Keep an eye Thursday as well, not only on retail sales, Tim.
Mm-hmm.
Keep an eye on French and German PMI manufacturing data that is also coming out on Thursday. And if you're trading the euro cross pair against anything, that's going to have a big impact. We've seen a lot of negativity coming out of manufacturing out of Europe. So I'm really interested in watching on Thursday the European manufacturing reports as well for a currency perspective.
I love it. Move on to crude oil, if you would here, Grant. Crude light. Oh, the biggest commodity in the world, and the one that I always look at right after I kind of peek at the dollar. Obviously, it's been strong. It's been holding. This is not a retracement. Even before we have that discussion, obviously, it's just kind of a consolidation up here. A lot of doji candles up near the high, Matt. A breakout, I mean, that would be tradable again. It's been tradable now for 4 months when you're trading the trend. You're above the 200. You're above the 9. You're above whatever that white one is. Is that the 50 there?
That's a 50. Mm-hmm.
Yeah. And you've got resistance up there drawn, those dashes on your chart. And by the way, that does give a clear identification of where that trigger is. Matt, what's your anticipation for crude as it's been bullish?
You got a few different opportunities here if you're looking at it from a technical perspective. Number one, you could be patient, wait for a little bit of retracement, which you may not get down into that 62.5 breakout that we had just recently as about a week and a half ago. So you do have a little bit of short-term support at 62.5. You have another one right there at 62. So you could wait for a little bit of a retracement back down into 62 to 62.5 and wait for a pivot at that point where it would be tradable. Obviously, you could wait for it to break out of, that 64.80 by 65 number. That's a really, really important resistance zone at 65. And then the third one, if you want to be a little bit more aggressive, you can kind of drop it down into a 30-minute chart and find some intraday level of resistance that you want to trigger above. But I think the best way to play crude from a directional perspective is be patient, wait for it to come down into that 62 to 62.5 number, or wait for the breakout at 65. And again, the breakout at 65 would be the strongest of the three.
I agree. I agree wholeheartedly. I think that would be the strongest signal. It's been a strong trend. Obviously, it should be on everybody's watch list. CL is the futures contract. Great way to day trade futures if you have those kind of skills or training. Grant, you actually did a course for tackle trading that's included in our pro membership called Futures Trading 101. Crude Light is the biggest futures product out there. Is it one that you focus on yourself?
Earlier on when I was trading, when I first started trading futures, I did, but now I primarily do the ES, the minis, ES minis. Yeah. Mm-hmm.
Yeah, and Wednesdays obviously have EIA numbers. Crude light stuck in a range while we're waiting for the trend to break. Interesting one. I got to tell you, I think the most fascinating area of the commodity market today is probably gold. Whether gold holds that breakdown below 1280 to me is very, very significant. We are pushing it here. The GC contract. Yep. Oh, Maddie, is that confirmation or what? I mean, you're fading. You have about 2 hours, 2.5 hours now where gold is not exactly continuing its sell-off. All the volatility came early in the morning. Back on a daily chart for just a moment here, Grant, if we could. 1280 was a level. It's significant. It's one that we've been watching. Matt, what's your read on gold?
It's now full-fledged bearish. I mean, you're going underneath that 1280 mark. You broke out of your symmetrical triangle to the downside. You have decreasing pivots on the resistance level, and now you have decreasing pivots on the support level on an increase on volume. And so I mean, you couple all that together, and that's bearish, bearish, bearish. And with my expectation that the dollar is going to go back up into resistance at 97.5 by 97.70, I fully expect this to continue to go down. And you're talking stepping stones, 1260, 1240, 1220 here. So it's going to be interesting to see what happens over the course of the next month or so. But I definitely have a bearish rating on it right now.
Yeah, it's ugly. Grant, head and shoulders type pattern reversal. You see the pivots coming down, clear support. Where do you I see a line underneath where this candle is. Where do you have your support levels here?
So as you can see, I actually drew them while we were talking, right? So it's got a support right there where it's sitting. That's being informed. If I go to the weeklies right here, expand this out. So you come in here, then you can see you've even got a couple other options there ahead of you. There's some support back up in this area. So around the 1280 area, and then which we're already below that. The next is probably down around the 1265 area. Somewhere in that area.
Yeah.
The weeklies.
And last but not least, until we get into our stock report and kind of talk a little bit about Directional Tuesday, and that's why we got Grant on here, I want to take a peek at Bitcoin again. You know, Bitcoin is holding this high base range here. And I know it's not one we talked about every day, you know, the last 6 months or so, because it was down stuck in the mud. Give me slash BTC, if you would. Yep. Bitcoin's got a test here, Matt. You're in the falling 200. You shot out of a cannon. You've had that institutional money, if we believe that that's what it was, come in and actually broke that thing out of a range. Now you're holding it. You know, if we break 5,500, is that now a developing uptrend?
Well, it's an uptrend now.
Yeah.
I mean, you can't argue the technicals there. I mean, it is a bullish uptrend. You have price appreciation, you have increasing levels of resistance, you have increasing levels of support. If you took the name away from Bitcoin and you took the history away from Bitcoin and you were just looking at this from a momentum perspective, it closed above that resistance level. Not only is the continuation of this current short-term trend, but you're getting above that 200-day moving average for the first time since the creation of the 200-day moving average in Bitcoin. Number one. Number two, you're also breaking out of a high base, which means you're breaking out of that 5,500 level, which should see price appreciation back up into that 6,000 by 6,500 level.
Mm-hmm.
And no, I'm still not trading it.
I don't think you are. Grant, have you ever played Bitcoin?
You know, the answer is yes, but luckily it was down here. So I actually bought some down here, and it's more just sort of a hold. But it's the first time I've done it. I've never been a real fan of it, but I thought, okay, this thing is retraced enough. I'm going to give it a shot.
So wait a sec. So you watched all the craziness. You saw.
Oh yeah, I sat to the side. In fact, all my friends were buying it, and I'm like, guys, this thing's going to turn down on you. And of course it did.
Oh my, that's interesting. Good timing, by the way. You know, grabbing it at the bottom there. Obviously, you must have had more patience than most of the public there, Grant.
Either that or I'm just slow. It's probably
better be lucky, right? There's no doubt about it. That's good. All right. So what do we want to do next here, guys? We've got Coach Grant. And by the way, if you're halftime crew, everybody say hi, Grant, and welcome him out. Give him a big halftime crew welcome here in the chat. Grant, you do the stock report quite often for Tackle Trading. And by the way, you do a great job with it.
Having fun with it.
You've really grown into it. You've embraced your role. You're really good on video. You've got the energy, and your passion about breaking down charts is obvious whenever I watch one of the stock reports. And we have quite an extensive process on how we pick stocks and build them for that report. And the first thing I want you to do is kind of just say hello to the audience and talk about how we come up and build those candidates out. And then we're going to go through a couple examples, okay?
Yeah, you bet. So typically the way it works is several coaches, in fact, all the coaches are invited to. What I've learned over the process is some coaches pick more than others, but ultimately it's this bucket of stocks that come in. And we don't yet know if it's going to be an options play, if it's going to be a stock play. But we start breaking those out by sector and by opportunity. We literally have massive list, like what we'll have like 100 or so that we walk through for each direction. And then there's, it's a 2-pass system. So this is not like the NCAA, right? The NCAA tournaments, 1 elimination. We do a 2-pass elimination, sometimes 3-pass. On the first pass, we walk through and people look at it, and it's just a quick, does it look good? Yes or no. There's quick reviews on it and analysis. And then those that are rejected, and we get the list down. Once it's down, then the next step is prep time. And prep time is where we start walking through a stock and we start looking at what the potential setup is and where the entries and exits might be. And even then, sometimes they're tossed out at that point as well. But after it goes through that, then the third and final step is Matt and Tim will walk through and start making decisions based on its tradability and the liquidity of the options and other factors. Does this go to the option report? Does it go to commodity report? Does it go to stock report? So that's the process in general. Did I get that close?
I think so. And we also, it is a closed door meeting with coaches on Friday. So there's also some fun in that meeting as well. Some good natured fun, I would say that. If anybody's had the good pleasure of enjoying it and sitting in one of the scouting report meetings, you'll know what I'm talking about. And then we build our bull and our bear list. And then you'll go do the video and do the post. And then Coach Christian, who does such a good job with design for tackle trading, helps us post it and make it look good. And we've got some candidates here today that are grabbing my attention. Now, CMC is looking, is that what we got here? CMC?
Oh, yeah. Let me zoom in. Yeah.
Commercial metals.
Yep.
Yeah, that's a reversal. AMAT is also breaking out and triggering today off the stock report. That one's looking pretty good. Showing me some strength. And Toll Brothers is actually a very tight trigger that we're identifying kind of currently midday here on a Tuesday. Matt, any preference on which one do we want to prep? Do you see any of those as stronger or weaker? AMAT, Toll Brothers, CMC.
All right. So AMAT, Toll Brothers, CMC.
Mm-hmm.
Let me just take a quick peek on my end. Just give me 1 second. Applied materials breaking out of a high base. I like that trigger. CMC. Reversal, breakout, retest, support. I love that trigger on CMC. And a good little old-fashioned breakout out of an ascending cup and handle type pattern on Toll Brothers. They're all triggerable. I would say, you know, if you're looking at a breakout, I'd like Toll Brothers breakout here. If you're looking at a retracement, I like CMC's. Both of them are good.
All looking pretty good. And by the way, there's like 15, 20 candidates on the bull list. I'd have to count them up here. In fact, let me do that right now. 5, 10, about 14, 13, 14 on the bull list this week, guys. And if you're a Tackle Trading Pro member, you obviously know the value of those reports. We do too. You know, that's why we put so much time into them. So Grant, let's just pick one. You can pick any of those 3. It doesn't matter. And
then Toll. Yeah, we're on Toll right now. Should we do that?
Let's do Toll and kind of walk the team out there how and you know what they need to look for when they're identifying target 1, target 2, and stop loss that we put in that report. And just to kind of refresh your memory on target 1, target 2, we had stop loss below 37. Okay. Target 1, 39.80 and target 2, 41, and kind of break down those technicals if you could.
Yeah, you bet. In fact, something that I do, so after we get through this selection process and Matt and Tim say, off you go, coaches, do your thing. One of the things that I do is I spend more time looking at the weeklies. So I might further refine the list. So that's exactly what I did with Toll. After Toll, I came in and I verified. You can see I've got a couple extra lines on here for momentum on there. You see a cayenne colored and a green colored. But I'm looking for, does this have room on the weeklies? And again, for me, it's always, what are the traders that are making decisions on the weekly level? And those that have bigger hands and bigger money. So I want to understand what they're looking at to make sure that I'm picking something that's going to be high probability. So I looked at that and said, all right, that one's it passes for several reasons. It's above all of its moving averages. The momentum, the cayenne, and the green are pointing up. There's no big obstruction. It needs to clear above this right here. And if it can break it right there above 37.9, then I said, all right, then it's got good probability it's going to go all the way up, which is things that informed our targeting. So Tim asked, hey, what are the things that guides us on our targeting? we look at this for our targeting as well. So we came into here, and when we were building these targets, we said, well, we've got some weekly level pressures where this has been a turning point. And so that informed us, all right, this has got some room for the first target. Same on the second target. Again, we're looking for other areas where decisions have been made on the weekly level. And so that guided the targeting on this one. Does that answer your question?
100%. The stop loss placement, and I think it's important that all of our team understands the way that we do this. When we say a stop loss, it's usually that place or lower. If you were building a trade here, Matt, it's up to the trader on exactly where they want to put that stop loss. We might say 37, but if they want to put it at 36.50 based on their personal rules, they have to apply that, correct?
No, the levels that we put on in the scan. Okay, the levels we put on the scanner report is basically the levels that we have to trigger above or below. Mm-hmm. So when you look at a stop loss at 37, that doesn't say put a stop loss at 37. That says you got to put a stop loss underneath 37, and you have to apply your own personal rules to that. And every coach might have a different perspective. I might, drop it down into a 30-minute chart, and Noah might say, well, I like it. I like using a momentum-based trailing 1.1 times the ATR, or I like to put it 50% of the ATR underneath the breakout channel or underneath support levels. So those are the levels that we're recommending to put a stop loss under. But it's up to the trader to apply their own personal rules to that. And same thing with on the trigger on the top side. Buying that breakout on Toll Brothers, there's a lot of different ways to get into that above that 30. I want to say it's the 30. Is that the $38 mark we have the trigger at?
Mm-hmm. Yep.
So, whether you're 10% of the ATR above that level, or you're 50% of the ATR level, or you're waiting for a close above that level, it's up to the trader. We're finding the positions, we're finding the stocks, we're finding the trades, but every single trader has to apply their own personal rules to that.
Yeah, that's right. Toll Brothers, just one example, we have stocks trigger off those reports like every single day. This one, and actually a couple others happen to be moving today. On the bear side, and Grant, in a bull market, it can be harder to find bear picks, but we had plenty. We had about 7 picks on there this week. I think Hormel is the one that's really grabbing my attention here, triggering this morning. And, you have to kind of use those watch lists to help every day as you're going through the markets. How do we build our short side stuff, and kind of walk through the same way you did on the bull side, walk through it on the bear side if you could?
Yeah, so similar sort of process as I'd mentioned earlier in terms of whittling it down. And then it's looking, as Matt had pointed out, there's different kinds of triggers or entries. So that some are the breaks, some are the pullbacks. In this particular case, this is a break. And so we were looking at this support level right here around 40.91 or the 41 area. He said, this is going to be a trigger that's going to be confirmed even on the weekly level. So we came over to the weekly level. I'll zoom in there as well. So we looked at the weekly level. We saw that there was several other touch points. You can see my mouse here and close to there. We felt confident if we could get below that, that'd be a good trigger point. Now, the area that we pointed out when we were doing the report was keep an eye on the weekly level. We're at the 50 moving average, so that could in fact turn things around. And so one of the things that you examine is how reactive or responsive is the stock to something like the 50 moving average. Some respond more than others. So when we're doing our prep work, we evaluate that. And I said, well, in some cases, this really responds. In other cases, it totally ignores the 50. So I felt confident enough with momentum turning, coming down. All right, even though we're triggering above it, I think we still have some good probabilities we can get down to the first target there.
I've got to tell Matt a story about last Friday's report meeting. We go through all the bull picks on the stock report, and I said, all right, Grant, I want you to go through every stock and tell me which ones are hard to buy. And I was thinking hard to borrow. We always double check that on the short list. And Grant goes through all of them and just deadpanned. He says, oh, yeah, Tim, they're all easy to buy.
Each one we go through. Grant, would you? Yeah, that one's easy to buy. Yep.
I will tell you, my favorite thing about the scouting report meeting is the quick takes. From the time Christian said, "Oh yeah, I was analyzing a Brazilian company, and I was analyzing it as a buy, and it was breaking out of resistance. It was like it might have been a Brazilian bank or something like that."
Mm-hmm.
Christian says, "Oh yeah, that's a shitty company. Let's buy." And from
Go
that
long.
on, go long. Yeah, that's right. Go long.
Yeah.
But it's so awesome to go into that meeting with 8 to 10 cutthroat traders, that all have a little bit of a different perspective, but you trust their eyes completely. And in that meeting, it's just a bunch of traders getting together for 3 hours, analyzing the entire marketplace, finding the best technical setups for the market for both bull and bear. And we obviously analyze the scoreboards, and we analyze and we rank all the sectors. And it's so fun to be in that meeting, just to watch a bunch of traders just do what they do. And I just feel so just blessed to be able to be a part of that meeting each week.
Oh, it's awesome. It's one of the best additions to my week as well. And we've been doing it now for about
It is
8, 9
definitely
months
the
now.
funnest meeting we have. I will tell you.
Yeah. Yeah. We got meetings today. Are you not looking forward to them? Is that right?
Yeah.
No,
What about this one, Matt? This
I
was
love
fun.
meetings. I love meetings. Meetings are amazing. They're so fun. We get so much productive work when we have meetings.
We love meetings. We don't love meetings. We love trading, but you got to have meetings sometimes.
You have to
Yes.
have meetings. Yes, you have to have meetings.
Say la vie. Grant, awesome job. By the way, keep up the good work. I hear comments all the time about how much people are enjoying your videos and what you're doing there in that stock report. Just a great, great addition to our coaching community here over the last couple of years. Thank you very much.
Thank you. Thanks for the opportunity, guys.
Matt, any calls to action as we kind of wrap up here today? Markets are flat. We got earnings tonight on Netflix. Get your popcorn ready. What do people need to be prepared for over there in Team Tackle?
Well, Team Tackle, we got the coaches show later on tonight. We got the halftime report tomorrow. Do we have an event on Wednesday night this week?
Yeah, we've got the Cash Flow Condors Mastermind Group.
Condors, nice.
Yeah.
Nice. That has, I think with those contracts, this is real good timing on that. I think with the contract, what's that contract? 64 days out?
Yep. Well, yeah, the rule is to build 65 days out. I think the rut right now.
65 days out, right there. Boom, boom, boom. Perfect timing on that mastermind group. So for the Cash Flow Condor team, we're at the mastermind group tomorrow night. We'll have obviously be here tomorrow and Thursday for the halftime report, and then Cash Flow Club on Thursday. We are switching our scatter report meeting to Thursday this week, obviously with the market being on Friday. So those scatter reports should be coming out on Friday, if not early Saturday. So you should have a little bit more time just because of the holiday weekend to review those reports. And if you're not a member of Tackle Trading, come on, get over there to tackletrading.com, sign up for a 15-day free trial, test everything out.
Sounds great. All right. Great job, Grant. Great job, Cody. Great job, Matt. We will see you guys tomorrow here, tackletrading.com's halftime report.